So picture this. You're walking into a new doctor's office for the very first time.
Right. We've all been there.
Yeah, exactly.
Hmm.
You step up to the reception desk, you fill out that familiar, just endless stack of clipboard paperwork.
Oh, yeah, the mountain of forms.
Right. And then you slide your health insurance card across the counter. The receptionist swipes it, types for a few seconds, hands it back, and says, "You are good to go."
And that's usually a pretty big relief.
It is. In that exact moment, you probably feel this profound sense of relief. You just assume that because this clinic accepts your insurance, the facility is safe, the doctor is highly qualified, and, you're in good hands.
That's the assumption, yeah.
But if you really stop to think about it, how does your insurance company actually know that?
Well, they don't just guess.
No, they know it because of a brutal, completely invisible investigation that takes place, months before you ever walk through those doors.
It's a massive process.
It really is. So today on our deep dive, we are cracking open an industry article from Prime Credential. It's titled, "What Payors Check During Background Verification."
It's a really eye-opening piece.
Yeah, the mission today is to pull back the curtain on this intense, roughly 60 to 90-day background investigation. It's called credentialing.
Right, credentialing.
And every single healthcare provider has to pass it before an insurance company will pay them a dime. We're going to explore the hidden databases, the strict guidelines, and the immediate red flags that keep our whole healthcare system functioning.
It's the invisible scaffolding of healthcare, really.
Exactly. Okay, let's unpack this. If a doctor comes to an insurance network and says, "Hey, I'm a qualified professional, let me treat your members," where does the insurance company, the underwriter, even start?
Well, before they even look for past mistakes, they have to prove the provider is who they say they are
Right.
and that they have the exact education they claim to have. It's this foundational concept called primary source verification.
Primary source verification.
Okay.
Because, if I apply for a normal corporate job and I hand the hiring manager a beautifully framed, physical diploma from my
They
university.
probably just accept it, right?
Yeah. They just look at it, nod, and say, "Great, you're hired." Do insurance companies operate like that?
Not even close. I mean, insurers absolutely do not take a doctor's word for it.
Wow, really?
Yeah, they consider a physical diploma handed over by the applicant to be essentially meaningless.
Wait, so a physical diploma is it's meaningless?
In the medical credentialing world, yeah, pretty much. I mean, it is just way too easy to forge a piece of paper.
I guess that makes sense.
So instead, payers follow these incredibly strict guidelines set by the NCQA.
The NCQA, what is that?
That stands for the National Committee for Quality Assurance. They are basically the gold standard accrediting body for healthcare quality.
Okay.
And under NCQA rules, the insurer must directly contact the issuing authorities.
So they bypass the doctor entirely.
Exactly. If a provider claims they went to a specific medical school, the insurance company goes straight to that university's registrar to verify the transcripts directly.
Hold on, let me play devil's advocate here for a second.
Sure.
Isn't that like a massive duplication of effort? Because before a doctor can even apply to join an insurance network, they have to get a medical license from their state government, right?
Right, they do.
So doesn't the state medical board already do all these background checks? Why does a private insurance company need to do the exact same verification all over again?
Oh,
Don't they trust the state?
well, it's a great question, but you have to look at the different motivations here. The state grants the legal right to practice medicine.
Right. Legal permission.
Yeah, but the insurance company, the payer, they are taking on the massive financial liability of paying for those medical services.
Oh, I see.
And by extension, they're taking on the risk of malpractice lawsuits if that doctor harms one of their insured members.
Ah, so it's about the money and the risk.
Precisely. The payer needs their own absolute baseline of truth. So they don't just verify the medical school, they query the specific state medical boards directly too.
Just to double check the state.
Yeah, to ensure the license is active, unrestricted, and, not about to expire next week.
So the state says they are legal, but the insurance company needs to verify that they are a safe financial bet.
Exactly. And it goes even deeper for specialties too.
Like what?
Well, if a provider claims they are a board-certified cardiologist, just claiming the title isn't enough. The insurer verifies that directly through the specific testing boards.
Okay, so more primary sources.
Right. For medical doctors or MDs, that means checking with the American Board of Medical Specialties, the ABMS.
And for DOs?
For osteopathic doctors, DOs, they check with the American Osteopathic Association, the AOA. They completely bypass the doctor in this fact-checking phase.
Just to eliminate any possibility of fraud.
Yeah, exactly.
Okay, so establishing that absolute baseline makes total sense. You have to prove you actually passed the grueling board exams before we let you, operate on patients.
Right, it's step one.
But here's the terrifying loophole I'm thinking of. Proving a doctor went to a great school and has a valid license that only proves they are smart and legal.
Mm-hmm.
It doesn't prove they're safe. I mean, simply graduating from a top-tier medical school doesn't guarantee you're going to have a flawless career out in the real world.
No, definitely not.
So what happens when a brilliant doctor has a terrible track record? Where do insurers look for that?
Well, that is where the investigation shifts from what they learned in a classroom to how they've actually practiced medicine out in the wild.
Okay, so moving past the diploma.
Right. Underwriters dive into the realm of the government's permanent record.
The permanent record. That sounds ominous.
It kind of is. Once the educational baseline is there, insurers start hunting for hidden claims, sanctions, or disciplinary actions using these incredibly heavy-hitting federal and state databases.
And the source material mentions a big one, right?
Yeah, the most crucial one outlined in the prime credential material is the NPDB. That's the National Practitioner Data Bank.
The National Practitioner Data Bank, I mean, that literally sounds like a vault. What exactly lives inside that database?
It essentially is a vault. It's a centralized U.S. government repository that tracks the dark side of medical careers.
Oh, wow.
Yeah, it records medical malpractice payments and adverse licensure or privilege actions.
So it's keeping track of every mistake.
Basically. So, say a doctor botched a surgery in Ohio. The hospital settled the malpractice lawsuit quietly, and then the doctor tried to move to Texas to start fresh.
Hoping no one notices.
Right. But the Texas insurance companies will find out. Federal law mandates that malpractice payouts and hospital suspensions be reported to the NPDB.
So you really can't hide.
No. Underwriters query this database as their ultimate, unfiltered source of truth for a provider's past safety issues.
So you can't just cross state lines and outrun a dangerous past.
Yeah.
I mean, the databases remember.
They absolutely remember. Everything is logged. But the NPDB is just the beginning, honestly.
There's more.
Oh, yeah. Insurers also aggressively screen against major federal exclusion lists.
Exclusion lists.
Yeah.
Like do not fly lists for doctors.
Exactly like that. The big ones are the HHSOIG, that's the Department of Health and Human Services Office of Inspector General Exclusions List.
Okay, HHSOIG.
And SAM, which is the System for Award Management. Plus, they check individual state Medicaid sanction lists.
Wow. So what actually gets a doctor placed on one of those federal exclusion lists? Are we talking about like minor paperwork errors or something much darker?
Oh, we are talking about serious offenses. Things like Medicare fraud, patient abuse, felony convictions related to controlled substances.
Oh, wow. Yeah, that's serious.
Or severe professional incompetence. What's fascinating here is the absolute career-halting severity of being on one of those lists.
That's what I was going to ask. Like, this sounds a bit like a permanent financial credit score, but for medical safety.
That's a great way to put it.
If a provider's name pops up on the OIG list, is it like a permanent death sentence for their career? Does a single ding mean they are blacklisted forever?
In terms of insurance reimbursement, it is an impenetrable brick wall.
Really?
Yeah. If a provider is listed as excluded on the OIG or a Medicaid sanction list, they are legally barred from billing Medicare or Medicaid. Period.
And Medicare's huge.
It's massive. It is illegal for a clinic to even employ them to treat federal patients. And because private insurers take their cues from these strict federal standards...
Oh, let me guess. The private insurers ban them too.
Exactly. An excluded provider cannot join private health plans either.
So one major strike, and you are entirely locked out of the healthcare economy.
Until that specific issue is legally resolved and you're officially removed from the exclusion list, yes. You're locked out.
That is intense.
And payers also cross-reference all of this with the Federation of State Medical Boards for licensing actions across all 50 states.
They just leave no stone unturned.
None. They even check DEA databases to ensure the provider's registration to prescribe controlled substances hasn't been revoked. The sheer volume of cross-referencing is staggering.
It really is. Now, knowing that underwriters are armed with these massive, all-seeing federal databases, it makes me wonder what the human element looks like.
Right, the actual investigators.
Yeah. When an investigator is staring at an application, What specific warning signs or, red flags make them immediately hit the brakes?
Well, the underwriters are essentially trained to be private investigators. They're actively hunting for patterns of risk.
Like what kind of patterns?
The obvious red flags are exactly what you'd expect. Any history of a relinquished license, a suspension, or a loss of hospital privileges.
Relinquish, you mean like they just gave it up?
Yeah, and if an underwriter sees that a provider voluntarily gave up a medical license in another state, they don't just assume the doctor retired early.
What do they assume?
They assume the doctor surrendered the license to avoid a formal investigation.
Oh, wow. I didn't even think of that.
Yeah, that triggers incredibly heavy scrutiny.
Okay, but what about malpractice? I mean, I imagine any doctor who has been practicing for, say, 20 years might get sued at least once just by the law of averages.
Sure, absolutely.
Does a single lawsuit disqualify them?
Not necessarily. In highly complex specialties like neurosurgery or obstetrics, occasional claims can just be a reality of the profession.
Because they're doing such high-risk stuff.
Exactly. But underwriters are looking for an unusually high number of malpractice payments.
Like a pattern of mistakes.
Right, or cases where a jury verdict went harshly against the provider for gross negligence. Payers will dig deeply into the details of those claims to see if they represent a systemic ongoing safety issue or just an unavoidable complication.
Okay, that makes sense. Now, looking at the prime credential source material, there is a red flag mention that really confused me.
Oh, which one?
It says insurers look out for missing quote-unquote tail coverage on claims-made policies.
Yes, tail coverage.
Now, to be completely honest, my first thought was that tail coverage sounds like, I don't know, an extra fee at a tuxedo rental shop.
Right.
It does not sound like medical insurance.
Okay.
Why would a paperwork gap regarding something called tail coverage lead to a flat-out denial?
The tuxedo analogy is funny, but in the medical liability world, a lack of tail coverage is financially catastrophic.
Really catastrophic.
Yes. To understand why this is a red flag, we have to look at the mechanics of how malpractice insurance actually works.
Okay, break it down for me.
Many providers carry what are called claims-made policies. Think of a claims-made policy like a security camera system that only records while you are actively paying the monthly bill.
Okay.
If someone breaks into your business today, but you canceled your security service yesterday, the company won't help you, even if you were a loyal customer for 10 years prior.
Ah, I see. So the insurance only covers malpractice claims that are filed while the policy is actively in effect.
Exactly. But in medicine, the break-in, meaning the malpractice lawsuit, often isn't filed until months or even years after the actual surgery or treatment took place.
Oh, wow. Yeah, that delay could be a huge issue.
It is. So if a doctor treats a patient, changes jobs, cancels their old claims-made policy, and starts a new one at a new clinic.
And then that old patient sues them.
Right.
The old policy won't cover it because it was canceled.
Yeah.
And the new policy won't cover it because the treatment happened before the new coverage started.
Exactly.
That is a massive unprotected window.
It is a giant liability gap. So tail coverage is a special, often very expensive policy extension that a doctor purchases when they leave a job.
So it covers the tail end.
Right. It pays to keep those security archives accessible, protecting the provider against claims filed after their original policy ends.
Okay, that makes so much sense now.
If an insurer sees that a provider left a previous job but didn't purchase the tail coverage, it means a multi-million-dollar lawsuit from their past could suddenly drop out of the sky and bankrupt them.
Which makes them a huge liability to the new clinic and the payer.
Exactly. Payers will typically refuse to credential a provider who leaves that kind of liability gap open because it makes them a massive financial risk.
That perfectly explains it. A simple administrative oversight regarding that tail coverage can completely derail a doctor's ability to practice. It's fascinating how much weight is put on the timeline of a doctor's career.
The timeline is everything. I mean, it ties into another major red flag: marked gaps in clinical practice.
Gaps in practice.
Yeah, insurers look microscopically at a provider's work history. Under those NCQA guidelines we talked about, a history of job hopping like brief, unexplained tenures at multiple hospitals or gaps of several months between jobs, that triggers immediate alarms.
Wait, really?
Oh, yeah.
So a doctor can't just take, say, 6 months off to travel the world or take a sabbatical to care for a sick parent without the insurance companies treating them like a criminal suspect.
Well, I mean, they can take the time off, but it comes back to the underwriter's mindset.
Which is to assume the worst.
Kind of. The underwriter doesn't know if that 6-month gap was a spiritual retreat to India or a secret court-ordered stint in a substance abuse rehab facility.
Wow. Put like that, I get it.
So the cardinal rule for providers navigating work history gaps is that you must control the narrative
So how do they prove they were just, on vacation?
through rigorous documentation. The payers allow for short breaks, maybe a few weeks for a fellowship transition, but if there is a gap of over 6 months, the clinic must submit a formal addendum explaining exactly what happened.
Like a written defense.
Yeah.
Hmm.
Was it maternity leave? A research year? Even if the gap was involuntary, like a non-renewed hospital contract, it has to be fully disclosed.
Because if you just leave a blank space on the timeline, human nature kicks in, and the underwriter is going to assume the absolute worst.
Precisely. You cannot appear evasive. Any dishonesty or any false or incomplete information on the application, like intentionally omitting a past disciplinary action in the hopes they won't find it in the MPDB, is fatal to the application. Yes. If an insurer catches you hiding negative history, it almost always causes an outright denial.
Okay, let's zoom out a bit and look at the sheer logistics of what we have just discussed.
It's a lot.
It is. We are talking about tracking down primary school transcripts, direct state board queries, checking multiple federal databases, verifying DEA certificates, analyzing 5 to 10 years of CV history to hunt down 6-month gaps, demanding addendums for taking a vacation, and proving the existence of tail coverage.
Makes you tired just listing it.
Right. This sounds like an absolute administrative nightmare for a clinic that is just trying to open its doors and treat patients. How long does this actually take?
It is an administrative mountain. The credentialing process commonly takes 60 to 90 days, so 2 to 3 solid months just to complete and verify.
2 to 3 months. Wow.
And for larger hospital systems, it can routinely take 4 to 6 months.
6 months before they can see a patient.
Before they can get paid for seeing a patient, yeah. Providers have to gather physical photocopies of current state licenses, government-issued IDs, residency certificates, board certifications.
And where does all this go?
They have to submit everything into these massive central data hubs. The most common one is the CAQH portal.
CEQH.
Yeah, that stands for the Council for Affordable Quality Healthcare. It's designed to be a single repository where doctors can upload their data for all insurers to see.
Oh, well, that sounds convenient at least.
In theory, yes. But keeping it perfectly updated with attestation forms is a massive chore in itself.
So if I am a highly demanded specialist, like someone at the absolute top of my field, and a rural hospital is just desperate to hire me, is there some kind of VIP fast track to bypass this 3-month waiting game?
That is the most frustrating part for many clinics. There really is no VIP lane. Very rarely. A few payers might offer expedited reviews for a hefty fee, or if a specific specialty is in critical demand in an underserved area, they might rush it. But generally, the timeline is entirely out of the provider's direct control.
So you just have to sit on your hands and wait for 90 days. Is there literally anything a doctor can do to speed it up?
The only real way to speed up the process is through proactive perfection.
Proactive perfection, meaning no mistakes.
Exactly. You have to submit fully updated, manual, error-free documents via the CAQH or payer portals from day one. And you have to understand the mechanics of how insurance companies operate.
What do you mean by the mechanics?
Well, many insurance credentialing committees only meet once a month.
Oh, wow. Once a month?
Yes. So if your application is missing a single signature or you forgot an addendum for a gap year, the underwriter flags it.
And by the time you fix it,
By the time you fix the error a few days later, you might have already missed the monthly committee meeting.
so you have to wait for the next one.
Exactly. That tiny mistake didn't just cost you 3 days. It cost you an entire month of waiting.
Which perfectly explains why third-party specialized services like Prime Credential even exist. A clinic can't afford to miss a meeting because of a typo.
Exactly. Clinics hire expert credentialing teams to shoulder this massive burden. These services meticulously follow the NCQA best practices, they organize the checklists, and they ensure applications are completely pristine before they are ever submitted to the payer.
So they act as a shield against those administrative delays.
They do. But what's really crucial is that these services also provide continuous monitoring.
Wait, continuous. I thought once the 90-day marathon was over, you were approved and done.
Yeah.
The background check doesn't stop.
It never stops.
Wow.
Think about it. A provider's state license could expire next month. A new malpractice judgment could hit the MPDB. Or a new sanction could hit the OIG exclusion list tomorrow.
So they have to keep watching.
Ongoing monitoring ensures that the clinic's administration is alerted immediately to approaching license expirations or new compliance issues. If a doctor's license lapses, even accidentally, the insurance company will immediately cut off their reimbursement.
Instantly.
Instantly. The verification must be continuous to keep the clinic financially alive.
That is just incredible. Let's bring this all back to you, the listener. The next time you sit in a clinic waiting room, filling out a form, or the next time you log online to book a new therapist, take a second to appreciate the invisible administrative gauntlet that took place before you ever walked through those doors.
It's a lot more than just a quick background check.
It really is. That simple little phrase, in-network, on your insurance portal, isn't just a billing term. It means that the person you are about to see has survived a rigorous primary source verification of their education. It means they've passed a microscopic audit of their malpractice history, they've accounted for every single gap in their resume, and they're being continuously cross-referenced against federal-sanctioned databases to ensure they are safe to practice.
It really is a massive, complex ecosystem operating entirely in the shadows, and it's strictly designed to verify trust and mitigate risk.
It is. But learning all of this leaves me with one final, very provocative question for you to ponder. We've learned today that insurance companies have access to these robust, highly detailed federal databases, like the NPDB and the OIG exclusion list, to aggressively protect their financial interests and meticulously vet doctors.
Right.
If all of this definitive data on malpractice payouts, license suspensions, and disciplinary actions exists right now, organized perfectly in a central government repository, why isn't there a simplified, publicly accessible version of this medical credit score so that you, the patient, can make equally informed decisions about your own health care?
Now, that is a profound tension to think about. On one hand, you have the provider's right to privacy and the fear that patients might misinterpret a complex, unavoidable medical settlement as gross negligence.
True, medical stuff is complicated.
But on the other hand, you have the patient's absolute right to safety and transparency. Balancing those two realities is one of the biggest unresolved debates in healthcare.
It's definitely something to mull over next time you're sitting in the waiting room, assuming the doctor is safe just because your insurance card was accepted. Thank you for joining us on this deep dive, and remember to keep questioning the systems working silently behind the scenes.